So let's take the conversation forward with Mr. Bhushan Agarwal, Vice Chairman and Managing Director with Shyam Metalics. And then you've got Ashish Dikshit, Analyst with ICICI Securities. Bhushanji, good morning. How are things? Long time?
Very good morning. All good. All good. Yeah.
So, Bhushanji, steel companies have taken a price hike 3 times in the last 45 days. Is this largely because of the uptick in iron ore and what is happening to the currency, or this is pure demand which seems to be coming on the domestic front?
First of all, one of the reason is like the raw material prices have gone up. So it is true, like if you see there is a correction in the iron ore prices and coke prices, which is already there. And number two, India being a pre-election year, the demand in India, in our country, is very steady. So since the monsoon is also getting over and there is all the demands are picking up, the regularization on the choking logistics and all things are getting regularized. So there's some little bit upward correction in the steel prices.
If one looks at the China angle, Bhushanji, Chinese demand is not coming back. China is slowing down. The channel checks are indicating that things will slow down further. Since steel is a global denominated commodity, do you think domestic demand versus local pressure, the impact would actually be nullified?
China is struggling from a different issue. The export of the China is going down. Internationally, there is a huge, pressure on the Chinese steel. And this is one of the reasons. Also, now China is planning to, invest more on their internal development, but we might see in the near future these things going to come up. In Europe, the interest rates have gone up internationally, and we further see some little bit hike. So what I see today, the prices, is almost at the peak. So I am really not worried on the Chinese steel for our country because there's a very little penetration. And with our kind of regulation in India against the Chinese and the support of the government on the infra and the pre-election year, I'm pretty sure, things are going to be very decent in the steel sector for our country. And especially, for the domestic steel demand and supply, things are going to be very steady.
Given where coal prices are moving, do you think steel companies will be able to absorb the benefits of the cut in coking coal?
Yeah, definitely, when there is a reduction in the price of the raw material, the price of the finish also falls. So in the periodic time, definitely that adds on to the advantage. But I really don't see a very great increase in the coking coal prices. There will be some kind of a increase. But in the long term, I see the raw material prices are not going to be, very, big changes on the pricing side and all. Because of the demand in the Europe, the interest rate, what is gearing up, and internationally also, the pressure on the Chinese steel production. So I feel like, the things are going to be quite steady, not very, very volatile, what we had seen in the past.
We move to the second half of this year where one would imagine that the government spending is high, state elections are around the corner, things have normalized for the auto sector, the defense capex is strong. Do you see the price trend to trend higher? Do you think it could be at least 5 to 7% higher than what it is by the time we finish this calendar year?
There is definitely the downside. I don't see a downside, but yes, with the corrections in the demand, because the 2 quarters are always happens to be the lean time for the metal and the steel sector. And down forward, if you see with a pre-election year and a lot of spending by the government and a lot of boost in the infrastructure projects and all across, we see the housing or we see, the infrastructure, the industrialization. So all across we see there is a lot of action happening. So yes, we can presume, there's no downside, but yes, the upside is always there with the turnaround of the time and with the pre-election year.
The other one, and because of all the block deals that are happening off late, you'll appreciate my curiosity. What we understand is that the promoter group needs to reduce its shareholding as well. I wanted to understand if there is a timeline set for that.
Yeah. There is a timeline. We are all under the SEBI guideline. And still, June 24 is the time. So we have time. We are not in a hurry. So we are looking for a right time because a lot of expansion projects are coming up in the company, a lot of downstream, and we are focusing more on the value-added, product. If you see, in last, 2 years or 3 years, from 17% to 48%, we have, upside on the downstream and the value addition facilities. And down the line also, all our new capex, what we have declared. So yes, we'll be requiring capital and a lot of projects and action is there, but we have time. We are looking for the right opportunity. And once, the board approval will be surely sharing everything, Yeah.
So, are you receiving interest from institutional buyers for your block?
Yeah. It is always, Shyam Metalics has been a committal, and if you see from the IPO side and before also, whatever we had committed, we have delivered more. And I believe, the company is doing pretty decent and there's a lot of value we think is, in the down the time, we see a lot of value is there in the company and investors are taking interest, yes.
Right. Okay, Bhushan, great to have you on the show. Thank you so much for taking the time out and joining in today.